Do you ever get tired of being told it's always a good time to buy? I mean, seriously, how many Dallas housing market videos can you watch and be told the exact same thing? Here at home in Dallas, we're not gonna sing that song. In fact, in this video, we're gonna tell you to throw the FOMO out the window and take the time to observe the market. The fall buying season is here and it's time to take advantage of it. Well, hello, this is Wendy Pinnell, and in this video, I wanna talk to you about taking advantage of seasonality and what signs to watch for in a shifting market. And then I want to talk to you about this whole fallacy of being in a seller's market. Everyone tells you Dallas is in a seller's market, okay? And this is why you're supposed to buy now, yesterday, last week, if possible. We hear that term thrown around so much, but it's often based on faulty data and faulty methodology, and I want to explore that with you. All right, well, it has been somewhat of a hopping summer here in Dallas. In our highest demand areas, we have seen new construction flying off the shelves, or even before they hit the shelves, as families scramble to get moved before the school year starts. Well, the kiddos are either back in school or about to be, and now is the time to be extra vigilant for signs of the market shifting. Now, less diligent realtors and buyers will be, full speed ahead, carried along by the FOMO, the momentum of summer demand. But now is the time to observe, step back, and watch for seasonality to step into play. All right, but I can hear you asking right now, Wendy, what is seasonality? I mean, what are you talking about? Well, here in Dallas, we see some pretty big seasonal price swings, okay? Our March to June-ish season tends to be very strong and competitive. Then things begin to kind of taper off a bit in July, then follow kind of a downward trajectory over the fall months where they ultimately bottom out in January. So much in real estate revolves around schools, and this is no exception, okay? Most families want to move when their kiddos are out of school, right? This makes sense, right? Well, we see this play out again and again in Dallas, okay? Like June of 2018, for example, your median sales price was $265,000. 6 months later, in January of 2019, it was $235,000. Again, in June of 2019, your median sales price was $272,500. Then, by January of 2020, 6 months later, it was back down to $252,500. So we see this same pattern year after year in Dallas. So when we talk about seasonality, in reference to the Dallas housing market, it's that idea that within the scope of home values generally progressing upward, we always have these peaks and dips. This year we saw a strong spring and summer like we would have expected. In fact, the Dallas Morning News released an article entitled "Dallas-Fort Worth Tops Texas with a Quarter of Statewide Home Sales." It states Dallas-Fort Worth is maintaining its lead as Texas's top home sales market, accounting for more than a quarter of statewide sales. The article reports that more than 27,000 North Texas homes sold in the most recent quarter. So we saw volume here in Dallas, but we didn't necessarily see prices, just do like a massive surge. In that regard, the higher interest rates did play a role. For example, between January and June of 2019, home prices rose 13.7%. In 2020, it was 9.4%. In 2021, it was 17%. And in 2022, it was 15%. Whereas this year, between January and June of 2023, in those 6 months, we saw an increase of 9%. So we saw some good volume this year, but compared to the last few years, price increases were held somewhat in check by the higher interest rates. That being said, across the board, sales activity peaked in June and began trending down in July, okay? And this is seasonality. It's what we'd expect. So what are the telltale signs we'll be able to see that our market is cooling? Well, certainly, we will look at data, right? Okay, we want to look at things like average sales price, are homes selling for less? A big one is the percentage of original list price, okay? How much below the list price are sellers accepting offers? We also want to look at volume in general, okay? We know we saw fairly high volume in Dallas this summer. How many closed sales are we seeing, okay? So has that changed at all? Since we're looking for subtle seasonal shifts, we want to look at month over month, okay? So, for example, in Denton County, The average sales price last month was $566,735. Then the average sales price this month went up just a little bit to $571,026. The percentage of sales price to list price, okay, meaning how low of offers are sellers accepting compared to the list price. Well, last month that amount was 97.9%, and then this month it was 97.5%. Okay, so how about the number of closed sales last month? Okay, now this is where we're gonna see our big difference, okay? Closed sales last month in Denton County, okay, we're talking about 1,504. And then the number of closed sales this month, 1,224. In Collin County, your average sales price last month was $608,932. Your average sales price this month dropped to $593,855. The percentage of sales price accepted by sellers last month was 98.2. This month, it was 98, okay? Number of closed sales. Okay, last month, we're looking at 1,555. Number of closed sales this month, 1,322. So again, we see that our volume is coming down. In Dallas County, average sales price last month, $540,491. And then it dropped a bit this month to $532,047. The percentage of sales price last month, 97.8. Percentage of sales price now, 97.9. So roughly the same, kind of unchanged there. Number of closed sales last month, 2,096. And then the number of closed sales this month, 1,782. So again, we see that sizable drop in volume. Moving on to Tarrant County, your average sales price last month was $445,333. Your average sales price actually went up this month, $454,054. The percentage of sales price last month, 98.1%, and then this month, 97.5%. Let's check out that volume again. Number of closed sales last month, 2,313. Number of closed sales this month, 1,949. In Rockwell County, your average sales price last month was $515,636. You saw a decent drop this month to $478,773. Your percentage of sales price last month, 95.7, and this month, 96. Now how about volume? Okay, number of closed sales last month, 227 compared to this month, 209. Lastly, let's talk about Ellis County. Your average sales price last month was $440,072. Your average sales price this month is down to $436,034. Percentage of sales price last month was 96.2, and then this month 96.3. So again, just not a whole lot of change in these upper metrics, but volume is where it's at, right? Number of closed sales last month, 329. Number of closed sales at the end of this month, 264. So the sales data, it's always going to tell us a story, okay? And in this case, the biggest story is how much volume has dropped off across the board. And that drop in volume is going to lead to softer demand. So we have our sales data, but there are also signs within the market itself that you want to be watching for. So let's talk about what to look for in new construction. Well, with new construction, we want to look for a builder's exposure, okay? Are homes, flying off the shelves, or are they seeing homes sitting and inventory piling up? We recently showed a subdivision in Fort Worth where we showed 9 different inventory homes in one community, all by the same builder. I texted the sales consultant and was immediately able to tell that they were ready to sell, and that's what you might expect. Now, another thing to watch for is, are the other builders within the community also seeing inventory pile up? If so, that's going to further glut inventory, right? So drive through the neighborhood. Is there a lot of exposure here? Okay, look at homes for sale. Are there a lot for sale? Have they been sitting for a while? One thing that won't be a super accurate predictor at this point are recent sales, okay? Because these summer months are a different animal than the fall months. We'll look at recent sales, certainly, but we won't hold them with quite as much weight engaging our sellers' current motivation. It may take builders a bit to realize momentum is shifting. You also have to keep in mind, in a hot area, there may not be a huge drop. Okay, so what makes for a hot area? Well, great schools and easy highway access for starters, okay? One without the other won't be nearly as strong. But if you have both, you're probably going to find yourself in a high demand area. Wiley, for example, has outstanding schools, but unfavorable highway access. It isn't in nearly as much demand as Prosper, for example, that has both. Still, there are plenty of new construction areas where we will begin to see prices softening and sales consultants more willing to talk. All right, so what will a softening market look like in pre-owned homes? Well, other than the fact that obviously they're older, your big difference with pre-owned homes is all the sellers are different, right? With new construction, you can take things like a lot of inventory, a lot of exposure into consideration. That doesn't apply so much to individual sellers. So how can you see a softening market in pre-owned homes? Well, you're looking for longer days on the market. Okay, you're looking for price reductions. You'll see actual verbiage in the listing describing that the seller is motivated. Now, here's a tip. If you can find a home that has been on the market for a long time with price reductions and terrible pictures, man, you've got a real shot at getting a great deal. In the pre-owned sector, this year we've seen very limited inventory, and those that do list have had a rough go of it. Okay, new construction is out there offering reduced rate mortgages because they have their own in-house lender. Pre-owned home sellers don't have that luxury. They can offer to pay down, a buyer's rate, but it'll take more to pay down less, if that makes sense, because they don't have their own in-house lender. Now, because of that, pre-owned homes in general have really struggled this year. All right, so we know we're caught in the middle of a seasonal shift, but we need to talk about this whole concept of a seller's market. Because regardless of any kind of seasonal shifts, if you're being told it's a seller's market, the view will be that prices are only going to go up and you need to hurry up and buy right now. The concept of being in a seller's market tends to be viewed with such totality that it precludes the possibility of getting a good deal during off seasons. So I want to address this from two fronts, okay? Let's talk about the data and let's talk about the methodology. Though I suppose really realistically, we should probably start with the definition. All right, well, Texas A&M's Real Estate Center explains that when inventory levels fall to less than 6 months, sellers have control over price and terms, resulting in a seller's market. So what do they mean by inventory and months? Okay, well, the National Association of Realtors is going to help us out on that one. They explain that months supply refers to the number of months it would take for the current inventory of homes on the market to sell given the current sales pace. From there, they continue to define the implications of a seller's market. Okay, they say historically 6 months of supply is associated with moderate price appreciation, and a lower level of months supply tends to push prices up more rapidly. Now, if we were going to look purely at the months supply metric, Dallas has been in a seller's market since 2003, okay? And this is why. When someone tells you Dallas is in a seller's market, within that same conversation, they're going to tell you that you need to hurry up and buy now. In a seller's market, prices go up, okay? And it doesn't take any particular level of sophistication to pull up this report and conclude that it is always a good time to buy. But let's dig a little deeper. First, let's talk about this in terms of data. When we see and hear reports about the amount of inventory, those numbers are coming from what we call the MLS, okay? And that stands for Multiple Listing Service. And how do homes show up on the MLS? Okay, it's when a realtor enters them on there, okay? So I want you to think about that for a minute. We have thousands of new construction homes in Dallas right now that will never make it to the MLS. In fact, in an article by knock.com, Janice McDill predicts that Dallas will double its new construction inventory by October of this year. So, we're talking, 100% increase, all right? That's a lot of houses, okay? And you know what? Okay, a ton of those, they're never gonna make it to the MLS, okay? So what is their absorption rate? I mean, how many months supply do they have? That's information we don't have, okay? It's a lot of supply, and it is a large amount of the Dallas housing market that's missing, okay? So we have a data problem, but we don't just have a data problem. We also have a methodology problem. Knock.com wrote an article entitled "The 10 Best Housing Markets for Buyers Across the U.S. in 2023. In the article, okay, get this, they predicted Dallas to be the top buyer's market in 2023. So you have pretty much every realtor in Dallas saying, we're in a seller's market, but then knock.com comes along and says, nope, Dallas is in a buyer's market, and not just, any buyer's market, okay? The top buyer's market in the nation. So clearly we have a huge discrepancy here, and it's a problem with methodology. For the most part, when realtors designate Dallas as a seller's market, they look at months supply, okay? They don't consider any other metrics. They base it purely on months supply. Well, knock.com uses 6 metrics to decide whether or not an area is in a buyer's or seller's market. And all 6 metrics are equally weighted. And month supply, it's only one of them. Knock explains that the 6 equally weighted measures each represent 6 years of monthly data. They use that to create their buyer-seller market index. They go on to describe that by observing trends in these measures, the index can forecast housing market conditions 12 months from now. When they did that, when they used those 6 metrics, they concluded that Dallas is in a buyer's market. So what are these 6 magical metrics? Okay, well, they're all the metrics that so often are minimized, right? Described as fleeting, sort of pushed under the rug, while all the time, pointing to month supply. Check out that low month supply. For example, the first metric was average sales price to ask price ratio. In July in Dallas, it was 96%. Now what that means is on average, a home that was listed for $400,000 in July actually sold for $384,000. So what does Knock predict for 2023? Well, they predict 95.6%. So looking at July, we are not that far off from that prediction. The second metric Knock uses is the number of homes sold. They predict that the amount of homes sold year over year, right, will be down 12.5%. So, again, just for fun, I compared Netris trends from a year ago, and guess what? Okay, July to July, the number of homes sold is down 12.4%. Now, their third metric is median days on market. Okay, in other words, the number of days between when a property is listed and when it's taken off the market. Well, in 2022, Dallas averaged 37 days on the market, and in July, it was 19. Okay, so that is quite a bit lower. Looking forward into the rest of 2023, Knock predicts that the median days on market are forecast to continue to rise. They predict that by December, a typical home is expected to sell in 52 days. The fourth metric Knock uses is median sales price. Throughout the second half of 2022, median sales prices dropped throughout Dallas. So no doubt that played a key factor in their analysis. But the question is, will that continue as we head into this buyer's market? Well, Knock's prediction is that the median sales price in Dallas would increase by 6.3% in 2023. So I checked out July, and right now, comparing year over year, it's down by 0.7%. So at first I was a little surprised to hear Knock's prediction, okay? But you have to remember, just because we're in a buyer's market doesn't mean prices won't inch up, okay? This is more about supply, how much supply buyers have to choose from. Metric number 5 has to do with months supply. So yes, we finally get to months supply. Remember, this is the singular metric many real estate professionals use to define whether or not an area is in a buyer or seller's market. Well, Knock predicts a 4.3 month supply in Dallas in 2023, the top buyer's market in the nation. Well, according to NAR and Texas A&M, okay, that number would still have Dallas squarely in a seller's market. And this really shows how Knock is not allowing the month supply metric to call all the shots, okay? It's taking that 4.3 month supply forecast, combining it with 5 other metrics, and declaring Dallas a top buyer's market. But in case you're wondering, in terms of the here and now, Dallas as a whole right now is at 3.1 months supply. Where is Knock getting this idea that we can go from a 3.1 to a 4.3 month supply? Well, that brings me to the 6th and final metric, inventory. Like I mentioned earlier, Knock predicts that inventory in Dallas will increase by an astounding 100.4%. Knock did comment that when it comes to inventory around the pandemic timeframe, Dallas did not see the same massive declines as the rest of the nation. They reported that in Dallas, inventory declined by 34% compared with 42% elsewhere. So Dallas didn't start 2023 with as much of a shortage, but that's not enough to double inventory. So I also took a look at the real deal. In August of 2022, they reported that Dallas-Fort Worth ranked #1 in the nation with 54,281 housing starts. #1 in the nation in new construction would definitely amp up that inventory, but a lot has happened since August of 2022. So how about 2023? Well, Bill Hethcock reports that building permits for new single-family homes ticked up in May in many of the suburbs north of Dallas, but remain below the number issued year-to-date in 2023 versus 2022 in most areas. So 6 metrics instead of 1, and suddenly, according to NOC, we're in the top buyer's market in the country. Now, this is great news for seasonality, and I'm excited to see buyers gain more of an advantage as we head into the fall. NOC reports again that home inventory will be at its peak in October. So this is excellent news. Right as we're seeing the benefits of seasonality, if NOC is correct, builders will be maxing out their inventory. So that is an outstanding formula for negotiating a good deal. Now, I should mention we have had one development in Texas that may interfere with seasonality, okay? Texas recently passed legislation that will massively drop property taxes. And while, it's great news and everybody loves the idea of saving money, it will give buyers more buying power. So in the same way that lower interest rates stimulate the market, lower property taxes will too. If you want to know about that, I talk about it in quite a lot of detail in this video, which you may want to watch next. In the meantime, Wendy out.